Okay, so I wanted to walk you through an actual day of live market calls. This is very quick. The explanation will take a little bit longer, but it's very direct, it's very to the point. This illustration that I'm drawing here, what you'll see in the trade room is you'll see different types of posts. So you might see something like 30.00 for buying. What that means is that if we have a price here at 30.00, this is the ES, so I'm abbreviating, it would be 2730.00. So if we have a price at 30.00, it means that we're going to be buying if price gets there. And if it says something like 33 TSP is 33.00, that means take some profit at 33.00. It's literally that direct, it's that simple. And so what I want to do is actually show you that with the actual trade room posts that are time and date stamped. And then on the side we'll have charts. So I'll walk you through it post by post, and so that you can see exactly how this unfolds and exactly how the posts translate to what a trader would do with this information. Okay, so on the left you see this is the trade room. It actually looks like this. I just have it minimized so that we can put charts and the trade room posts up on the same screen. And then of course on the right we have charts. You can use any trading platform. I'm using NinjaTrader for this example, but it really doesn't matter what type of software you use for this trade room. So the first post was good morning. Yesterday I said that we would likely see 31.5, and of course in Globex we got all of that and more. So that was just referencing a post from yesterday on January 4th. So here's 31.5. If you look at my crosshairs, we clearly got that. So we didn't quite get there yesterday during the RTH, but we did get there through Globex. So that's what that's referring to. Okay, so let's get to these raw trades. So the first post, 31 for buying. What that means is that at the price of 31, we are going to look to buy. So whatever type of trading software you use, you should have some sort of drawing tool. So for me, I'm just going to use a horizontal line. So when I see that, so at 7:30, actually let me scroll to 7:30, which is right here. So at 7:30, that was posted. Okay, so let's be accurate here. So in the trade room, you can see January 5th and then the time. On the charts, you can see January 5th, 2018, and then below, down here, you're going to see the time. Okay, so I want to make sure this matches up exactly. So what I'm going to do is go up here to my drawing tools, to my horizontal line, and over here it said 31 for buying, so I need to put a line in here at 31. And I do that because I know in advance that if price gets down here, I want to buy off of that price level. Now, what you'll notice is that these price levels are insanely accurate, and they often will go to the tick. And because they go to the tick, there's a real chance that you won't get filled. And so what we like to do is place a limit 1 or 2 ticks above that price level. So I'm already going to have a limit order probably at 31.25, which is actually what happened earlier today. Okay, so 31.25, I have a buy limit. So if price gets down there, I'm hoping to get filled, obviously. Now the next comment at 32, so just 2 candles later, that was right here, it says that's aggressive. There was an just spelling error. And by the way, we don't apologize for grammatical errors. This is the real deal. We're looking to trade, not conduct spelling bees. But anyways, that's what that means. So that's aggressive, not giving it a lot of room. So what that means is that you'll notice with these trades, because we know exactly what we're doing and at what prices we're doing it at, there's no way we're going to give it a lot of room to go against us. And so most of the losses, when and if we do take losses, are going to be 2 or 3 ticks. At the very most, we're going to be looking at maybe 8, but usually in that range between 2 to 8. 8's really the extreme, but most are going to be, 2 or 3 ticks on the losing trades. The winning trades, well, you'll see that in a second. Okay, so then the next post at 34, which was this red candle here. So we're definitely filled now by this time. Okay, so now we are long at 31.25. Also have 30, which is the next post at 34. So may need to give it that. So then what I would do is I would take my line drawing tool and I would put a line at 30. So what that means is that, look, it could get down to 30 And so I may need to give it a little bit more breathing room. So let's see what happens. So then 4 minutes pass. So let's go to the next post. And then what I'll do is I'll tell you what actually happened with that trade, because you'll see in just 2 seconds. Okay. So this, let's see, that's 37, and then this was going to be 38. So at 38, which is right here, so this was a losing trade for us. We ended up taking 1.5 points, so 6 tick loss on that trade. Glad it happened this way, actually, because this is reality. This is how it can really happen. Now, if you were, because it was an aggressive entry, if you held things a little tighter, you would have only took 2 or 3 tick loss on that. We ended up taking 6. We thought this would hold, it didn't, came through it. No big deal, because we have a plan, and you'll see what that is. We have 26.5 and 25, and then below 23.75 and 21.5. This is a HTH. That means has to hold. What that means is that this price level, if price does get down there, then that is a very strong support level we're going to be aggressively buying off of. A pullback to, that's PB, 25 should be enough, but of course anything is possible. Okay, so that was posted at 38. So what I would do as a trader, I would go to my line drawing tool, grab a line, and I need one at 26.5 and then 25. So I put one here at 26.5, and then I put one here at 25. Okay, so I have these levels. What does it mean? What am I doing here? I'm buying. If you said buying, congratulations, you got it. This is what we're doing. We know in advance. We know if price gets down here, we're buying. We're going to be entering in at 26.75 or 27. If we get down here, we're buying at 25 and a quarter or 25.5. Okay, the next post was at 42. Need to get back above 30 if there's any strength. Okay, so let's go to 42 so we can see how this played out. Okay, so here is 42. So what's going on here? Well, we are in long. Okay, so we're long 26.75, and this post here was we need to get back above 30 if there's going to be any strength. And so here's 30. So what I'm watching for is I am watching for price to get above 30 and then stay there to show that this is strong enough to go to the upside. The next post was 5 minutes later. So it depends on if you're conservative, that's what that abbreviation means, or aggressive, AGR, can take some profit at anywhere between 31, which is where we're at basically now at the post, anywhere between that and 33. And then you see this next comment. This is really, really important, looking for at least 36.5. Why is that important? That's important because we have now a long-term target. So now what I'm going to do is I'm going to take my line and I'm going to put one at 36.5. Okay? So I'm long at 26.75. I'm looking to take profit as was posted here, and here's the time it was posted at. Okay, between 31 and 33. So anywhere in here, I'm looking to TSP, which means take some profit. So if you scale out your positions, you can take some out. You know, if you're trading one contract, obviously you want to just be out and then look for the next buying opportunity or selling opportunity. Okay, so then the next post was at 52, so another 5 minutes later, which was right here, and that says getting above 30 is even more important this time. So this 30 level is really kind of a tipping point that is going to really tell us if we're going to make it to this 36.5 or not. And then at 58, so 6 minutes after that, 30 or 28.5 for rebuy, 30 is aggressive. So let's see how that materialized. Okay, so here was the candle of the post. So at this time, if you took profit at 31, you had another chance to get out again. And so now what we're looking at, we have a new price, right? So we have 30, we already have that. And now we have 28.5. So what I'm going to do, I'm going to grab my horizontal line, put it in at 28.5. Okay, so what happens? Well, what happens is I have an order in now at 28.75. Why? Because if price comes down here, I don't want to have to hurry up and do that. I want to have it already ready because I know that at 28.5, I want to be buying. If you want to be more aggressive, you can put it at 30, 30 and a quarter, etc. Okay. The reason why it's more aggressive is because price is already basically there. I mean, won't take too much to get it down there. So that happened at that time, and then the next post, 1 minute later, so one candle later, we got back down here. So if you chose 30, you're in. You're long at that price. Okay, so at 59, we have this post still not out of the question. We see 25, which is this one down here, or a tick below that. And that assumes if we keep on dropping, that's where we're headed next. But remember, we're still long. We're still up a few points in this single trade from the 26.75. And then so the next post was 11 minutes later and it's TSP is 33. So remember, and that was from earlier, which I actually didn't put that price level in. So we want to look at this 33 price level to take profits out. So if you want to liquidate, then that's where we're looking to do that. If you want to be a little bit more aggressive, remember we still have the 36.5. So that post at 8:10 happened right here. So at this time, when the market's kind of done, it's done. Most trading days will be about within a 2-hour range. Some days, like today, it was done 40 minutes into the market. It just kind of died out. So as you can see, it just kind of went back and forth. So here's that entry. So if you keep going, we didn't get to our 33 at that point. So what happened here? Well, now we're long again. We already have an order in here from a long time ago. So we're long at 28.75 most likely, based on the 28.5 price, right? And so where do we take profit? Between 31 to 33. We already have those prices in there. We already know what we're going to do. So how does the market unfold? Back and forth. So we're either out there or we're out there. So it took a while for it to do that, okay? And then if we fast forward a few hours later, it took a long time, kind of a back and forth. We finally hit it. My time 12:30, and then we of course got past that, and then we, kept going for a little longer. But that's it. It's that simple. We have a price, and we know exactly what we're looking to do there. In this situation where we had this one that didn't work out quite as we thought it would, we don't want to let it go against us too much. Okay? There's price levels that are more aggressive than others, and those price levels that are aggressive are labeled that way. And if you want to be more conservative, then what that means is that they're going to have a more exact reaction. And so regardless, we want to make sure that the way that we do this, we're going to be in front of both entries and exits. So all in all, this was a 9.5 point day. Really, really easy to do that. And the reason why I say easy is because it's all planned out. Both of these trades, this long, and even the one that didn't work out, that was planned out well in advance of price even getting there. So the orders are already sitting there waiting for price to get there. And so when it does, we're in. And where do we get out? Well, if we scroll back 30 minutes ago, 20 minutes ago, we already know what our targets are, between 31 and 33. We're looking for price to get into that range. And that's it. This is repetitive, just exactly like this, day in and day out. Yesterday was the same as today. Monday will be the same as the last 2 days, and the next day, and the next day, and the next day. And it's very specific. Specific price levels are given. We're either buying on them or we're shorting them. And then we're looking for targets. And the targets, we already know what they are in advance. And so those will be posted. And so once we're in short, we're going to look, this is where we're looking to get out. And every now and then we'll have rebuy levels, or if we're going to be short, then obviously it'd be resell levels. And we had that today. We had that right here, this rebuy level. And we're in. It gives us another opportunity. So all those posts happened within 40 minutes, and there's not much to post after that because we already, all these price levels are what they are. And so we know what to do. So we know where to get in, we know where to get out. And if it's an aggressive entry, we're not going to let it go that far against us. And that's it. Kind of like getting the answers to the test, right? So kind of a longer explanation, of this. It's very simple. I wanted to spend a little bit more time on this because I want to help you understand it, but that's exactly how it works, and it's the same every single day. If we were to scroll back and go through yesterday, it's the exact same scenario, just different prices. We're going to look to go long off of a specific price or short off of a specific price, and we're looking for specific price levels to exit, and you can see exactly how that unfolded.